Hello, everybody. Time for the weekly update. Today I want to discuss something that um, really my insurance company is probably the ones that make me talk about this stuff. My professional liability insurance. I want to talk about internal controls and embezzlement, and uh, really how as your tax preparer, it's not really our responsibility to find embezzlement. Um, so what we are actually required to do is when we file your taxes, when we go through your stuff, if we happen to see indications that embezzlement is taking place, we are required to inform you of our suspicions. But we are not required to actually audit your information and look for it. What we do when we prepare a tax return is we review your records and apply tax code to it, uh, and put it in a format that is readable by the IRS and the state government. So that's what we're doing. We're not auditing your books. We're not and what I mean by auditing is we're not verifying your numbers, right? Like for example, in an audit, if I was auditing your books, if you had like an invoice, an audit procedure would be to contact whoever sent you that invoice and verify that they actually did indeed send you that invoice. So that's what you do in an audit. You verify the information with third parties. When we prepare a tax return, we're not auditing your information. We are just reviewing it to apply tax code and put it in a format for the IRS. We also prepare an IRS audit defense folder based on the information we believe will be most useful to the IRS in the event that they audit you. With that being said, so that's kind of my disclaimer, right? We're not actively looking for embezzlement by your employees, your contractors, or any other party. But what I do want to talk about then is it's really your responsibility to establish internal controls between you and your staff, your contractors, that prevent them from being able to embezzle from you. There's actual documentation and international standards on internal controls established by various bodies, regulatory bodies. None of those really apply to us because typically we're all pretty small businesses, and most of our clients are single member LLCs that are usually operated only by them, by the owner, and maybe a few contractors. The contractors not really having any access to your records, your books, and your financial institutions such as credit cards or bank accounts. But as you grow, if you decide to hire somebody else to be your bookkeeper, whether that's a third party, us, or you hire like an actual employee to be a bookkeeper or a contractor, the best thing you can possibly do is not give them the ability to make transactions. So for example, when we take on bookkeeping for a client, we ask for third-party restricted use access to your financial accounts, such as bank accounts, savings accounts, and credit cards. We don't want signature authority. We don't want your personal access because that allows us to do transactions. And when you are the one that is keeping track of the transactions through the bookkeeping, it's very easy to then make fictitious entries to hide transactions for embezzlement. And so that's one of the main internal controls, is that whoever's doing the record keeping doesn't have access to the funds. And the same thing goes with some of the other like functions. As you grow, you might look at like accounts receivable or invoicing customers, or paying accounts payable and paying bills. You don't want the same person that's bringing in money having control over money going out, right? So really, because if you have the same person doing all three, they can create a fictitious vendor, create an invoice, you pay that invoice and then they record it in the QuickBooks, and suddenly you're paying extra to your contractors, right? Or your bookkeeper or whatever. So there needs to be what we call segregation of duties. We don't allow the person that's keeping track of everything, the bookkeeper, to also have access to the funds, nor are they the one billing clients, nor are they the one paying invoices or paying bills. And same thing goes for the person running invoices for your customers, and then the person that is paying bills. So that's kind of the basic internal control, segregation of duties. Usually at our size, most of those functions are being done by you as the business owner. It's all your cash. You can't steal from yourself, right? Like if you decide to take money out of your business, that's called a dividend or a distribution, right? Like you can't steal from yourself. But if your bookkeeper does that, takes money out of your business, that's called embezzlement. That is stealing. So but that is what I wanted to talk about today, just kind of a FYI. It's not our responsibility to find embezzlement. Like I said, if we come across it or we see signs that possibly could be occurring, we will inform you of that, but we're not actively looking for that. If you are suspicious of embezzlement, you can hire us to review your books for potential of embezzlement. That's kind of happened in the past where we've suspected a third-party bookkeeper was doing some stuff. We've run across this a couple of times with some clients. Sometimes you can get the money back. Most likely you're not. You can't squeeze blood out of a turnip. And people usually embezzle because they need money and they've spent it before you even find out about it. So just some things to keep in mind. But if you do expect it, or you think it, or you're suspicious of it, you think it might be happening, we definitely can be hired to review your books, audit them, and see if we can find that kind of stuff. Anyway, if you have any questions, feel free to shoot me an email or comment on this. Thank you.